Thanks a lot for that. Well, let's move on then and let's get chatting with Charandeep Singh as well as Varun Daga, co-founders at Girik Capital, who join us on the show. Good afternoon, gentlemen, and thanks so much for joining. And well, we've got your presentation that comes in normally, but I don't have the stocks actually. I don't have the cash levels as well that you're currently sitting on. So help us out with that first up. Have you raised some cash? What kind of cash levels are you sitting on? And given the kind of global markets that we are in, what would the approach be from here on?
Hi, Nigel. Thank you for inviting us. So we are at about 22% cash level. It's been like that for a few months now. And I think we don't take cash calls based on market directions, but it's just a matter of our process. And we are always in the hunt of finding new ideas as new sectors emerge. And we are looking for that. So as we find ideas, I think as of now, we are seeing some sectors emerge in capital goods and many companies which are into industrials, and also we are allocating money there slowly. And but we still are pretty conservative and going extremely slow because I think we still need to see some emergence in terms of leadership.
Got that. Varun, stay on. Let me bring in Charandeep into the conversation as well. Charandeep, what a start to 2023 it has been, right? The market has thrown so much at money managers, right? From interest rates and the way they're rising to what's obviously happening now, as a fallout to some of these US lending institutions, to the Adani saga over here. It's been nothing short of a roller coaster. So as we've navigated some of these events, what are the top things that you're keeping in mind? For instance, is this a year where you're sticking to, let's say, local themes over global facing ones? Are you looking at unleveraged plays? So in terms of broad strategy for the portfolio for 23, what do you have in mind?
Thank you. Thanks for having us on the show. I think you raised a lot of relevant points in that in what you just mentioned. I'll try to highlight some of those and how we're thinking about them. I think you're absolutely right when you say that there are global issues. I think we're not realizing how grave those global issues are. You just saw with the SVB bank the issue that happened overnight. When you go from 0% interest rates to 5 or 6% interest rates in 1 year, which has happened in the West, there's bound to be several accidents because the cost of capital has just gone through the roof. So the way you discount cash flows will obviously change. So far, India has been fairly insulated for many, many reasons, mainly because we have a lot of domestic flows, right? So whereas foreigners have been sellers in India, probably because they have better opportunities on the fixed income side globally, where you're getting and seeing phenomenal yields after many, many years, money will naturally find a safer place where there's better risk reward. India, like I said, was insulated, but it's only to some degree. Valuations do reset. Ultimately, fundamentals are the driver for markets. So one thing we have going in India is that we have earnings growth and earnings momentum on our side. And that's offsetting the fact that valuations are correcting very gradually. So I think one has to be very clear that if you are going to make money now, you have to have a strategy that's different. You need to be in stocks that are, relatively undiscovered, which have superb earnings momentum, and a long tail earnings tail and earnings growth, which is not necessarily priced in or well discovered by the market. So essentially, you need to find something that's a little more ignored. And as portfolio managers, that's ultimately the quest.
Charandeep, but since you have about 22% of your portfolio in cash and you're still waiting to deploy it, are you expecting a very sharp decline in the markets? Because even if you go down 1 to 2%, at best the stocks that you are liking, may fall another 5%, right? What is the entry level that you are awaiting to deploy this cash that you're sitting on?
So, I think there's a few thoughts. I'll just think out loud and I'll speak out what I'm thinking. I feel that with every passing day, we are getting a little more spoiled for choice. It's becoming more and more of a buyer's market. So, and this again has happened after a long time. There's also the emergence and data points available on many new sectors. And if you go look at the history of markets, it's always different sectors that lead the next bull market whenever it comes. We're seeing very early signs of the sectors that are partaking or that are showing us relative outperformance and strength and solid earnings momentum, which we think is not necessarily priced in, is more on the manufacturing side, right? So capital goods, manufacturing, power ancillaries, several export sectors that do very basic level manufacturing, be that in auto ancillaries, be that in power ancillaries. So there's you have a large segment of the market that has not been very well covered by the sell side and largely underowned by the market now for many, many years. So we are taking our time. It's a buffet out there. There's a lot of choice. You need to make the right bets. And I think that's the process that we are going through at present.
And if you're willing to slug it out, maybe the buffet is getting more and more delicious. But the last time you gentlemen joined in, I think you all mentioned 5 stars, one of those companies that you all added in the portfolio. We spoke to them earlier today, and the management sound confident about the way ahead. 30% AUM growth they're talking about. They're talking about NIMs holding in 13-14% odd. So that's something that you'll share the last time around. But could you share any fresh idea that you'll have taken into your portfolio? You'll have added a couple of companies, a couple of stock-specific names, if you could give us.
We've added, I think.
Yeah. Go ahead.
Can you hear me?
Yes.
Yeah, we've added REC, sometime back, probably a month ago. And I think, our thought process was that, in fact, we have NTPC and REC. So, looking at the power sector and the growth in the power sector and some regulatory changes that are helping the industry. And, we also feel that globally value is doing better. So, especially if you're getting value with growth and strong dividend yields, we feel it's a good place to, protect your money and also grow it.
Okay, so REC, that's a new addition. That's an interesting one. Charandeep, can I ask you to please expand on this theme? Because the point is completely taken. I mean, if there's one person or one entity that's consistently investing, it is the government of India. But, the problem is that stocks like, let's say, an ABB, Siemens, you're not getting them as cheap as where they were 2-3 years ago. So how else are you playing this CapEx cycle revival theme? And, maybe some ideas, some names, if you could discuss from the portfolio, that would be great.
Yeah, so we have been playing this theme for some time. When we sort of felt like this is something that could add value to our investors, we started researching this whole theme about a year and a half ago. And, I can name the names that we have in our portfolio that, center around the CapEx theme or manufacturing or ancillaries, if you will. We have names like ABB, which you mentioned. And again, please don't construe this as advice to go out and buy these stocks at this price or that we are recommending them because, we've done our own work and we have our own thought process around them. So it's not to be construed as advice. It's just a guideline as to some of the stocks that we hold in our portfolio. But our portfolio does have a very large cap goods and manufacturing bent to it. We have names such as ABB, REC indirectly. I mean, we like financial services as a theme, but we may not like the money center banks as much as we like some of the ancillary names like 5-Star or REC, where we think we can add value to the portfolio. We have names like NTPC. We have names like RHI Magnesita. We have names like a contract manufacturer like Sirma. We have a gearbox manufacturer like Elecon Engineering. We have a power EPC company like Hitachi Energy. We have a EPC contractor which focuses on power called Power Mech Projects. We have a plethora of names. We have an auto ancillary, but going into specialized fasteners for windmills, etc., called Sundaram Fasteners. We have several names. And they're very different, and they're all driven by very different end market drivers. But the interesting and underlying theme is, they know how to, they're in sectors which we think are pretty sunrise and which have growth ahead of them, and sectors that are not necessarily over-owned by the market or over-modeled by the market, if you will.
Varun, in the auto and auto ancillary space, Sundaram Fasteners is a stock that you'll own. Any others which look attractive to you, and why, if you could explain the rationale for holding it in your portfolio?
So, we thought that what they're doing on the windmill side, they also got a very big order on the EV side. So I think the company is very, very strong, and they have a capability to really grow. So, we felt that the management is rock solid, and there are a lot of triggers that could help the company, in the future. So that was one reason. Apart from that, we don't have anything on the ancillary side. What we liked about Sundaram is it was moving uh, from one segment to, just from fasteners into industrials. And, what we've seen is as companies do that, they tend to get better valuation, and also they're increasing the scope of the work that they can do. So that is what we found pretty interesting.
Okay, all right, gentlemen. Thanks so much for joining in. Charandeep as well as Varun. Appreciate you joining in, giving us your thoughts on the markets. And we discussed a couple of stocks, as you all said, with due disclosure, that you are not recommending any of them. Wishing you all a good evening ahead. By the way, when we're having that chat with both those two gentlemen, the markets have recovered a little bit. We're holding above that 17,400 odd, so that's pretty good news. And the Nifty Bank is 100 points off the low point of the day. Then HUL appointment, new boss at the top. Well, the market seems to have liked that. The stock has moved well into the green, and Titan's the other one as well. That's seen a bit of a spike up. We'll slip into a short break. You come back, we'll get in our technical experts. They'll give us a couple of picks.